Well, hello to you. It's Scott again. It's time for another Lunch and Learn. And today we are going to be looking at the topic of local versus international investing. Now, I'll remind you, our Lunch and Learns are quick. We try and keep them to under a TED Talk, 18 minutes, so that you can get the information quick, you can decipher it, and you can make decisions for your life. So let me share my screen with you quickly, and we're going to go directly to the slides. And like I said to you, local versus international. Now, I've spent most of my life trying to hack my way to wealth. What does that mean? I like to put myself in the room where I'm the dumbest, poorest person so that I can get there quicker. And yes, this is me on on Neck Island with Richard Branson. And I tend to joke with people, as per my shirt, I'm a wealth hacker. What is hacking wealth? Well, it's a way to get there faster, quicker, simpler by working in a community. I'm not giving you financial advice, just sharing with you the knowledge that I've learned over the last, 23 years of international investing. My first property I did when I was 13 years old. I renovated a house and I put a double bedroom bathroom on. When I was 22, I did my first development. When I was 24, I did my first property in London. I then started a business at 25, helping people invest in thousands of properties, houses and apartments in South Africa, hundreds of properties in London, hundreds of properties in Australia, and hundreds of properties in America. And in 2014, we actually evolved and we built Wealth Migrate and we started investing in commercial property. So we've now helped people in 171 countries, facilitated over 1.2 billion US dollars in terms of investments. And this is the knowledge and the experience we bring to the table so that we too can share. So question number one is, what is the difference between local and international property? And it's really quite simple. If you look at it on the left, you've got the items, you've got local and you've got offshore. So if I take local, the returns are often higher, okay, depending on what country we're talking about. But if I use South Africa as an example, then, the returns are higher. It's the same in China, same in India. The returns are higher than they are offshore. Property is tough, so it tends to be easier locally than it is offshore. Peace of mind. Well, you get no peace of mind, generally when it's local. That's why people in the emerging world want to invest in the first world. But you do get it in offshore because of wealth protection. Financial planning, maybe, whereas offshore, yes. And when I say offshore, I mean in first world international markets. Rand hedge or currency hedge, no, if it's local. And if it's offshore, yes. And then finally, diversification, no. And if it's offshore, yes. Now, what are the advantages to international property investing? Well, there's a lot. You've got wealth preservation. So that's where you protect your capital. Warren Buffett says rule number one to making money is don't lose money. Rule number two is refer to rule number one. Now, I'm going to share with you today that if you're in an emerging economy and it's devaluing against a first world currency, you're losing money. And so it's about wealth protection. It's a currency hedge. You go and you can invest in first world assets with a first world income. It's generally tax efficient. You can build a credit rating. You've got diversification. You've got peace of mind. You've got a plan B or an insurance policy. You've got the possibility of actually immigrating. And you've also got comparable returns in a first world economy. And this is some research that came out of my book, where I actually compared the yield. So that's the income of Australian property versus South African property, right back as far as the research went. And you can see that Australian property, if you invested in Australian property versus South African property, you'd be hell of a better off long term. And I guarantee you those trends have just continued to widen. Why is now a good time? Well, if you look at it, you've got low asset values. Now, people would say, well, they were lower 10 years ago. Yes, they were. But I guarantee you they're lower now than they will be in 10 years' time. You've got strong local currencies. So again, you'll say, well, the Rand is 16 Rand to the dollar. Well, 10 years ago, you could be investing with me and it was 8 Rand to the dollar. But unfortunately, if you wait another 10 years, it's probably going to be 32 Rand to the dollar. Strategic investment approach versus crisis management. So, this is not one for now, but what I've learned from wealthy people is that they invest and they make good decisions at the right time strategically. I'm going to actually run a webinar tomorrow night on this, on diversification. And I'd highly recommend you come along to Diversification 5.0 web masterclass, because I talk a lot about this strategic investment versus crisis management. You can control the variables. You know today what you're getting, what returns you're getting, what assets you're buying, and what, currency devaluation, whatever the currency exchange rates are. There's good opportunities. In the current market, there's good opportunities. So you can actually use capital to unlock opportunities. And then you can also use your personal allowance. So whether you're in India, China, South Africa, they've all got exchange control, and these things change all the time. So use it while you can. And this is a very rudimentary graph on the right-hand side, but ultimately you can see your purchasing power, which is the green, and it's going down, and the cost of the investment's going up. And unfortunately, those jaws are just getting wider and wider. Let's look at the mistakes people make. Well, I often have people come to me and they say, well, my financial advisor says I must pay off my house, my local house in, let's use South Africa. And the problem is, if you take the rand to the US dollar, if you go back as far as 1982, which was the last time that the rand was more valuable than the dollar, it is literally devalued by, on average, 6% year on year for the last 40 years. It's quite scary. And then they say, yeah, but I've got apartments, I own a bunch of assets. Well, if they're not earning you any income, not only are they not earning you income, but they're also in a depreciating currency. If you read my book, I did a whole thing called the Global Wealth Index. Now, most people know about CPI, the Consumer Price Index. Well, this is the GWI, the Global Wealth Index. And ultimately, it's your purchasing power. It's your purchasing power to go on holiday for a skiing trip, or to go to Disney World, or to send your children to University of Oxford or Harvard. And it's ultimately a price parity. So we could see, just like a basket of goods with CPI, it's a basket of goods based on our wealth. And if you take the last 30 years, our wealth in South Africa has devalued by 29.5% year on year. Something to take into account as to why to consider offshore and not just local. The mistakes that people make when they invest offshore, well, there's a lot of pitfalls. A lot of people get the wrong information. They don't understand the purchase process. They get wrong evaluations, wrong tenants, wrong cash flow. They don't understand the maintenance. They buy the wrong property for the wrong market. They can't sell it, or they've got no customer service. And we've actually got 3 white papers. So if you reach out to us and we can give you a copy of our e-wealth pack, you can read our 3 white papers. If you're a beginner, it's the 5 laws to property investing. That's all about local investing. If you're intermediate and you want to look at the offshore real estate success, that's about how to go offshore. And then ultimately, if you're sophisticated, it's the 4 ways to build a global real estate, fund. So 80% of people lose money, and that's because they make crisis investments. They don't get the right information. They've got the wrong partners. They don't understand the cash flow. They work with the wrong companies. They, don't understand the sales costs. They buy off plan. This is a classic one. And so, for me, whether you're investing, locally or offshore, you really need to look at these stats and you need to change them. And I mean, that's why I literally wrote the book on this. It's Property Going Global. It was endorsed by Clem Sunter. We created GIDS, our global investment due diligence system, which is a way to help people safely and securely invest their money, whether locally or internationally. But particularly if you want to go internationally, which markets do you go into? How do you find the right information? How do you find the right partners? We've now evolved that at Wealth Migrate, where literally there's multiple different steps, where we go through the entire process. And I would highly recommend that you come along to one of our masterclasses or our workshops. We've got a masterclass on the 5 important lessons that you can learn from the wealthiest investors. And it's a 90-minute masterclass that you can come to. Or you can come to a 4-hour workshop, which is our investor roadmap, where we literally take you from A to B. It's all about the fundamentals. What are your needs? How do you create a wealth plan? What are the investment opportunities? How do the partners and due diligence work? How do you manage risk and compliance? How does the platform work? How do you actually invest on the platform? And ultimately, how do you earn? Steps A to B. And so for me, it's truly exciting, because in terms of the next steps, whether you're wanting to invest locally or internationally, there's pros and cons to both. Hopefully tonight, today I've shared with you the pros and cons to both. But the whole purpose of this Lunch and Learn is to keep the lessons short and simple. So that's what I believe the difference is between local and international. I've given you the pros and cons to both. I've given you some of the pitfalls. I've shown you how 80% of people that try to go internationally and do it on their own actually lose money. And so I highly recommend that you come to one of these many things that you can do here in terms of next steps. Come to our Diversification 5.0 Masterclass. You can see the link there. Come to our Investor Roadmap. We hold that once a month. buy a starter pack, literally get started with us. We help people, loads and loads of people every single week, get started and take action to get going. And then finally, if you want to, just go directly to the platform, wealthmigrate.com, and sign up. And so that is all from me, Scott Picken. This is our Lunch and Learn. If you've got any questions, I look forward to you engaging with the team. We bring these out regularly so that you too can learn. And most importantly, if we're adding value, please share this with your friends. See you next Lunch and Learn. Cheers.